I want to move on to oil, which is also seeing a lot of downside in after-hours market, closing the day out pretty low. $33 there is the after-hours trade. Crude tumbling to a level we have not seen in 12 years, folks. Oil prices are falling every day. So far, anyway, in 2016. Here with expert analysis, we have Stephen Schork. He's the editor of the Schork Report, which provides daily insights on the energy markets. All right, Stephen, I need to talk to you now because, I mean, look at this. Despite all the trouble that we have going on in the world right now, all the trouble between Saudi Arabia and Iran, and yet we've got oil that continues to fall. Why?
Well, absolutely. And part of it is exactly what you point to about Saudi Arabia and Iran. Saudi Arabia and Iran are in a Cold War. They're not fighting one another on the battlefield. They're fighting one another at the gas pump. So right now, with the United States giving its imprimatur on the Iranian nuclear issue, the sense that the Saudis are squeezed. So these two countries are going to fight one another at the price pump. So therefore, where is the price growth now globally? It's in Asia. And of course, now the curtain's been pulled back on China. It's not exactly the communist economic powerhouse we all thought it was. You look at Japan, it's in its fifth recession since 2008. So Saudi Arabia and Iran are fighting each other for market share in a market that is clearly contracting, hence why you've got the pullback and the extent pullback in oil prices. One
of my constant questions is, why are we not seeing this show up in our economy in the way of more consumer spending? I mean, people are hanging on to every dollar. They're saving more at the gas pumps. They have for a while. I get the argument, right? That people were like, we want to believe it for a while. We want to see it so that we can believe it. But they should believe it by now because we've had lower prices for at least a year. Why isn't it translating into spending?
Well, I've been saying it for the past year that cheap energy, and for that matter, cheap copper, cheap aluminum, cheap lumber, cheap iron ore, cheap industrial products are not a panacea for economic doldrums. They are a symptom of economic doldrums. Commodity markets cannot drive economic growth. Only thing that drives commodity prices is economic growth, or in this case, economic contraction. So what we've been seeing, not just in the oil markets, but in the industrial metals for the past year, is the canary in the coal mine. So hence why we're not seeing a knock-on impact because of these low oil prices. The oil prices are low because demand is low.
Okay, so Stephen, would you say that this actually is a net negative for our economy? When you see oil prices tanking as much as these have tanked, it means troubles for the oil companies, and these oil companies employ a lot of Americans, especially in places like Texas and Oklahoma.
Yeah. Oh, it actually is. It's a net negative simply because it's the canary for something is wrong with this economy. We're looking at key indicators, Chicago purchasing managers, durable goods, the coincident lagging indicators are all pointing to economic contraction. Now, with regard to the oil companies, now let's keep in mind there are three different types of oil sectors inside one company if it's integrated. There's the crude oil producer, which is ugly now, and it's only going to get uglier over the next 6 months. There's the midstream guy, the guy who actually moves the barrels to and fro, and then there's the refiner. The refiner, I can buy $35 oil and I can sell $55 barrel gasoline. The refiners are doing quite well, so it's just
let me ask you this.
But yes.
Would you buy oil?
Yes.
Right now? I mean, are we near a bottom at all?
No. I'm a seller. No. I've been bearish for a year and a half. It's worked. I'm going to keep on doing it until it stops working. Well, right now today we took out 32.40 key technical support. That was the low that was put in during the Great Recession. If you recall, in July 2008, we almost hit $150 a barrel. In December of 2008, we hit 32.40. We took that out today. So that's the first number.
What do you think? 20, 25?
Oh, absolutely.
Okay.
That's
right.
No, absolutely. I think mid to low 20s at this point.
Okay, so your advice is don't buy it here. You might want to short it.
No,
Thank you so much, Stephen Schork. Good to have you here.
All right,
Good to see you.